Welcome back to TechMates. Today, we're diving deep into the world of Fintech. Even if often overlooked, Australia and New Zealand are a great place to build Fintech companies. You have much more access to regulators, a relatively wealthy customer base, and a lack of competition between bigger financial institutions. We'll hear how pure frustration led to a digital bank designed to rival TikTok, how building the pipes of open banking is breaking the legacy vault mentality, and how a platform is making sure someone with $5 has the exact same investment opportunities as a millionaire. Let's start with Dom Pim and his story of turning absolute customer frustration into a banking revolution. Let's go.
Just go and do it and see what happens.
Ideas are worth like jack shit, absolute jack shit. Like if you can't execute, there's nothing.
Just take that initiative to actually take whatever crazy ideas that they might have and just try to see what comes of it.
Don't be afraid of ambition. Chase it, love it, wrap your arms around it and say it out loud.
New Zealanders don't know any better. They will just get up and give it a shot. That's why we were first to get to the top of Mount Everest.
Go to dream that ultimate dream. Like what is it that you ultimately want to do? And it's all achievable.
So from what you just said, I imagine that Up came about because you were incredibly frustrated with the banks. Is that a fair assumption?
100%. And worse than frustrated, like as a customer, you can be frustrated, but we had a software company that was building software for banks. And we never intended to build software for banks. Our intention was to get the very best people that we ever worked with in the world on all these crazy projects and get them in a room together in Melbourne so that we could build a software company. And we didn't even know what we were going to do. We wanted great people in a great environment, working on great shit. We didn't know what the shit was. And we stumbled into banking because we met with the managing director of Bendigo Bank, which is the 5th biggest bank in Australia. And there's a big gap between the big 4 and then the 5th. And some people say the 5th biggest is Macquarie. Some will say it's ING, which is a Dutch bank. And some will say it's Bendigo. It really depends on how you measure it. But regardless, they're a really huge bank. And we met with the managing director and we were trying to raise money for our software company. We weren't trying to build banking software. And he asked us if we could build banking software. And of course we said yes. And so we couldn't and we didn't, but we said yes and we won a tender and we ended up doing it. And so we started building banking software and we were frustrated as customers, yes, but there was something happening in the world. There were digital banks launching all around the world. And we were in Melbourne building software for the 5th biggest bank. And we were building their mobile and internet banking software. And we did that for 6 years. And they paid us a lot of money, but we were really frustrated that we couldn't deliver the features, the capabilities, the real-time data, all the things that we wanted to do. We couldn't do that in a bank environment. And so we started working with the big banks. We worked with 2 of the big 4 banks. We started working in Asia, started building digital banks around the place because there was this trend happening where Australian founders were leaving Australia and starting digital banks. So Bank Simple was the first digital bank in the world and it was founded by an Australian, Josh Wright. Monzo was founded in the UK. One of the co-founders, in fact, one of the 2 co-founders was an Australian. Simon,
the other one was German, right?
Yeah. And then you've got another company out of the UK. The name just escaped me, but another digital bank started by Brett King. And Brett's brother, Troy, worked at our software company. So we had all these people. Josh went to university with my best mate's girlfriend. I knew these people and they were out there building digital banks. And here we were frustrated as customers and frustrated as software developers building banking software. And we were constrained that we couldn't do what we wanted to do. And so that frustration boiled over and we said, you know what, we're just going to build our own bank. And then we started looking at how do you build a bank? And you can't build a bank because you got to have a license. And to get a license, you need $100 million in reserve. You need $100 million a runway. You know, that takes many years to go through all the process. You got to buy big systems from SAP or Oracle or IBM. And, you know, it was a real nightmare to sort of think that you could build a bank. But I could see my peers building digital banks overseas. And I'm like, why can't we do it in Australia? So when you said it was frustrating, yes, it was frustrating, but it was beyond frustration. It was like innate desire to build something better for ourselves, firstly, and then everyone else. How could you make something that was so cool, everyone wanted to use it every day and would love it? One of our very first hires was this guy, Anson, who is from New Zealand. And he's from Wellington. And I call him like my right-hand man or my chief imaginer. Up is essentially his brainchild. So we hired 3 people on the same day. One of them was our chief architect. One of them was our chief imaginer, Anson. And one of them was our head of platforms, like our system operations. And so if you have someone that can do the architecture of the platform and someone that can imagine the future and build the user interface, and then someone and the features and the product, and then someone who can build the infrastructure that runs it, you sort of have all the ingredients in the first 3 people that we hired to be able to build this bank. And Anson is so awesome. Up is literally his brainchild. And we used to say that we pay him to imagine the future. Before I was saying how Australians and New Zealanders are totally awesome. Well, Anson's one of those ones that I've never come across a product person as smart or as future looking or as capable. Like he will develop a prototype himself of something that is imagined in his brain that no one else can understand. And then when he shows you a demo that he built on the weekend, everyone goes, "Oh, it's so obvious in hindsight." Like, "Oh, that's amazing." But he's the guy that literally thinks of it and then builds it. So Anson and I locked ourselves away and sort of imagined what a bank could be if we built it something that people would love. And then we hired a head of design. And I remember Dan, he now works at Facebook and Instagram and WhatsApp and doing payments and all sorts of cool stuff. But Dan did a whiteboard session with me and Anson, and he wrote on the whiteboard where we were in the journey of being the best in the world for engagement. And he's like, over here is Instagram and Twitter and TikTok and all these amazing things that people are interacting with, engaging with. And people put those apps on the home screen of their mobile phone, and they use them 20 times, 50 times a day. Banks were measuring usage once a month. You're an active customer if you use it once a month, right? If you use it once a day, you're like a Uber customer, you're like a super customer. And so Uber's a good one. Uber, Airbnb, these sort of companies, they were dominating in the app space. And so he wrote them on the whiteboard and he said, we're all the way down here. And if you do like a J curve, they're all the way up here. And we shouldn't be comparing ourselves against banks. Forget about banks. The best bank in the world is Monzo. And we don't want to be better than Monzo. We want to be better than TikTok, better than Instagram, better than Uber. So we need to build an app that is engaging. We don't need to build a bank. And if people love the app and they engage with the app, then the banking comes second tier.
It's amazing how looking at highly engaging apps like Instagram and TikTok rather than other traditional banks completely changed the game for Dom and his team. But to build those cool modern financial apps, you actually need to access the data that is locked away inside those legacy banks. That's where Dermot comes in. He's building the pipes, the infrastructure of open banking. Let's hear Dermot explain why traditional banks are so slow to innovate and how giving you control of your own data changes the entire ecosystem.
For someone who's never heard the phrase open banking, can you explain in, easy language what you're building and why it matters to the average consumer?
Yeah, so open banking is a concept, right? It's the easiest way of putting it. It's the idea that your financial data is yours. That's the crux of it. That's the underlying piece. But it's driven by government regulation. The idea is back in 2016, global financial crisis occurred. Banks started getting wobbly everywhere and people's money were stuck in places and they couldn't move it around. And so the European government stepped in and said, actually, going forward, you don't get to lock a customer in. They need to have the opportunity to move their data with them. Because at the end of the day, the reason people stick with banks is because it's bloody difficult to move, right? You can't easily decide, I want to swap to this other bank, because you get paid into that bank and you've got bills that are going out of that other bank. And essentially, it becomes a core part of your kind of financial life. And so it's not easy. So the EU came up with what they called a PSD2, Payment Service Directive. And it came under that way to also allow customers other opportunities to move their money. So think about it. The only other way to move right at that time was log into internet banking or mobile banking, do an account-to-account transfer, or pay with a payment card, right? And so that was your Visas or MasterCards. You can go tap a card and away you go, or in those days, swipe and stick a chip in. That meant customers were again locked into those services, right? That was owned by the bank and owned by the card rails and those kind of pieces. So the idea was actually we're going to break apart this and we're going to let customers do what they want and move things as they need, which was kind of innovative at the time. The UK was part of the EU at the time. They adopted it as well. They took on a different approach to the EU, mandated a particular standard and a way of doing it and defined it from an API perspective, whereas the rest of Europe said, go sort it out yourselves, it's up to you. And that started this revolution in new innovative ways of interacting with data. And so instead of screen scraping, which was the old way to get access to data, that's where you gave somebody your internet banking username and password, which sounds crazy as an idea, but I mean, it still happens today, right? You give them your username and password, they log into your internet banking and they download all your history and then they'll give you a mortgage, right? That could stop straight away. You could actually go and consent to it. And anybody who's logged in with Apple ID or logged in with Google into something, you go to Netflix and it's like, create a Netflix account or log in with your Google account. That is the exact same process for open banking. And so when you go there, it says select your bank. And that's the same as finding Google on the consent list. You go there and Google pops up and says, hey, do you know you're logging into Netflix and they're going to see your email, your name and address, and you say, yep, I'm okay with that. And away you go. Open banking is the same. You don't actually have to put in your Google credentials to log into Netflix. It takes you to Google. Google says, do you know what you're doing here? This is who and this is what's happening. And you say, yep. And away you go. It's the exact same now with your bank. You get sent to your bank and your bank goes, hey, by the way, this mortgage service is asking for this data for this period of time so it can achieve whatever outcome you're looking for. Is that what you're agreeing to? You click yes, and away you go. And the joy is that's all accredited. So random hacker X can't turn up tomorrow and accidentally request your data. Because that system that is set up because it's government driven means that everybody has a license to interact with your data. And so from a regular person, you should never have to know what open banking is. That's the important key piece, right? In the same way, we don't necessarily know how banks move money between each other when we do account-to-account payments, or how when you tap your card at a terminal to purchase your coffee, you don't know how that works. Open banking is similar to those pieces in the background. It's what's enabling cool things to happen. But the idea is, at its core, your information is yours and you own it. You own your accounts, you own your money, and you own access to them. And now you can decide who has access and who you share that information. So it's really empowering.
And what's the role that Wych is playing in that?
So we are the pipes, the connection, the infrastructure as such that this sits under. So in the simplest sense, if you think of banks as reservoirs where all of this information and money and all those things sit, and you think of those mortgage brokers or personal financial management apps or another bank on the other side that's trying to offer a service to the customer. You as a consumer would go to that other provider and you would click buttons there and they would use our pipes, our connections, our secure end-to-end flow to make that happen. And the idea being there is they don't need to be experts in these technologies. They don't need to be experts in security and governance and all those pieces to be able to offer you services. We take away that burden from them, and we ensure it's secure end to end, and that way we become that core system over which these things operate. So it's a really kind of big and important part of what happens, because once it's embedded, it becomes part of everybody's day to day. You don't notice you're using it.
Right. And why are the banks not innovating on that side as fast? I mean, they could use that opportunity of the regulation for open banking and go and build this kind of, log in with your bank themselves, right? What's keeping them from doing that?
Well, there's two pieces. One, they are by their nature conservative organizations, right? They are designed to keep things inside, not let things out, right? They've got a vault mentality. Right. And so they don't iterate fast. They can't respond to markets the same way as smaller, more agile organizations or just organizations who are technology companies first. Right. Banks are financial institutions first, and they use technology to enable that. And so technology is a cost for them rather than providers like us who are technology companies, whereas technology is the product as such. And so it's very difficult for them to be innovative in that space.
It's fascinating to think of financial institutions as reservoirs and Dermot's company as the secure plumbing makes all that data flow. So now that we've covered everyday banking and the data behind it, what about building actual wealth? Our final guest is Leighton from Sharesies. He started with a very powerful vision. What if investing isn't just for the wealthy? Here's Leighton on how they're breaking down the barriers to wealth creation, ensuring that anyone can get started, whether they have $5 or $5 million.
So maybe let's talk about the vision a little bit for Sharesies. So you got into this by making investment more accessible, I guess. And so that's what you achieved. So how do you think from here? Like, do you think the average sort of teenager is going to get into investing? Do you want to help them with that? Where do you think the company is going to be in the next 5 to 10 years?
The business is to create financial empowerment for everyone. Our original vision, was that someone with $5 and $5 million could have the same money opportunities. That served us really well for the first 7 years of the business. And then we started to outgrow that vision a little bit, because once people have access with $5, they then want all the other things. The ambition is not that people will have $5, it's that they can get started with. And we're sort of broken that now. Like, you ask me anything that we can invest in, strategically, that's not you still have to build some product, but if you wanted to invest in this podcast, I could sell it for less than $5 each, in a portion. We've got all those structures in place. That vision was so good, right through to even speaking with regulators and stuff as we've been licensed. Like no one was fractionalizing New Zealand, Australian stock exchanges, right? We're the only company still that does that. And you're talking about like how that doesn't work. Well, we're talking like, we set out front that what we're trying to do here is give 5 people $5 and people $5 million same opportunities. If we all still believe in that and buy into that, then we need to find a way to work. And to the point that sometimes when we're going through those licensing processes, the people we're working with will spit that back at us. It's like you don't even, it's almost like this really start solving the problems with you. It doesn't, and there's multiple times that happen in different sets. But then we have a few different arms to our business now. So the first pillar of our strategy is a wealth app that actually grows people's wealth. So that means we've got to get people, we want to create 1 million millionaires, right? That's what we're trying to create here. So, and that means you need a wider picture of wealth. So Sharesies is known for investing, but we now we've got 70 or 80,000 people who have their savings on our platform. And then we have a whole bunch of people with their KiwiSaver or superannuation. I've got a bunch of people with their insurance, their car insurance. We're just going to keep broadening out these wealth app propositions, both here and in Australia. And then we've got this other pillar, which is connecting companies with their stakeholders. So we now have a huge amount of them shareholders who own businesses in New Zealand and Australia on our platform. And we want them to be engaged with, part of this democratization is that you get the same access to information that you would if you're running these big institutional funds or something like that. So now we're helping companies connect with them because we think it's really great business for them. So we run things like employee share schemes and we run a registry business, which has about 700 business customers.
Is that like a Carta?
Bit like that. That's right. And people don't really think about Sharesies that much as that being our business, but being a registry is actually a core part of our product. And then the third one is productizing our technology. It's in this one here, or at the second and the third pillar are the real global opportunities for Sharesies. At the moment, like last year, we onboarded Fonterra farmers, for example. So Fonterra is a cooperative. That means it's owned by its members, which in Fonterra's case is the farmers and dairy farmers who supply milk to it. And they have to run a capital position based on a bunch of rules. And we now do that. So like all the farmers can manage it on their mobile in Sharesies and stuff. So it's like this other technology aspect to it. So the future of Sharesies is like using our software be at the heart of people's wealth really across it. So you're really starting to integrate all of these places and getting that full picture of your wealth and ultimately helping you get ahead so that you can live the life you want. That's what we're doing.
Wow, that's cool. There's lots of kind of, I guess, criticism on Robinhood, right? For like enabling gambling rather than investing and enabling or like kind of getting people to invest in stuff that they don't understand in a way. How do you think about that? Like, do you do education around investing as well for young people?
We make a massive investment in education. It's not to say that people don't make bad decisions on Sharesies, right? Because at the end of the day, we have 12,000 plus options, but we really believe in choice. Rewinding 8 years when we were sitting around our kitchen table talking about what Sharesies might be, one of the options was that we were like the first sustainable investing platform that or ethics-based or like that. And among the 6 of us, we couldn't agree on what that would look like. So you think, right, we've now got close to 800,000 users of our platform. Imagine trying to support 800,000 people with ethics-based decisions, or like everyone has different thoughts and views. And we think that choice is really important. So to your point, we front it with education, warnings if we think necessary. Like we have things like volatility warnings. And we're trying to do much more in the portfolio space. We'll definitely move into advice for the first time with the AI tools and LLMs. You can see scalable advice that is actually good. So we're really heavily investing in this space. We're taking point on Robinhood, like there are actually a lot of similarities between our business, there's no doubt. And actually, I think Robinhood are trying to, or they have tried to democratize this world. A lot of people don't appreciate is that their options trading business probably funds a huge amount of the development for lots of other things. And maybe they haven't got that balance quite right a few times. I don't really know. And I don't spend a huge amount of time looking at that. I do know that Sharesies has a similar or has a profile of customer that means for a huge number of people who sign up and use the platform every day, we lose money on. And there'll be a point where they go through that curve. Right? And that's at a point of wealth because ultimately there's a fixed cost for everything we do. It costs $7 or $8 just to get someone onto the platform through AML and all that sort of thing. And you think about what it costs if you end up speaking to a human. Most of that's not. I mean, this is the things we have to comms with our own team even. But ultimately, the purpose of the business is really strong on what we're trying to do. So we won't jeopardize that. And that's why we're not in things like options and stuff right now.
Thank you for tuning in to TechMates. If you enjoyed this episode, be sure to subscribe, leave a review, and share it with friends. We'll be back soon with more stories of Kiwi and Aussie founders reshaping the future and disrupting down under. Until next time, keep dreaming big and daring to disrupt.